Hi everyone, this is Matt with the Fundamental Investing Institute. Thank you for tuning in today. We're continuing our talks on the history of the Federal Reserve. And in the last video, we introduced the national banking system. This is the financial system or the monetary system that persisted for about 50 years prior to the founding of the Federal Reserve in 1913. So in the national banking system, in that 50-year period, there were a number of financial panics. They were actually relatively routine. And roughly there were about 8 up until 1907. 1907, we're going to devote a separate video to this, but 1907 is the panic that really becomes the spark that leads to the creation of the Fed. And we'll see that when we talk about it. But for now, we're talking about some of the panics that persisted prior to 1907. And the panic during this period that is really the worst occurs in 1893. The country is on a gold standard at this point. It's on what's called a de facto gold standard, which means a gold standard was not law. It became law in 1900. But during this period, the country is on a gold standard. It reverted back to a gold standard after the Civil War. And with a gold standard, anyone holding paper currency can convert that currency into gold. So anytime there was concern that the paper currency could not be converted, there would be a run on banks. So basically people would convert their money into gold, and that would deplete the reserves of the banking system. It would decrease the money supply, and it would lead to a financial panic. And it would lead to a sharp contraction in the economy. In 1893, this is exactly what happens. The gold reserves held by the Treasury declined, and this leads to concern among depositors that the government may suspend gold convertibility. Depositors rush to banks, they take their gold out. This reduces the deposits, and it starts to spread throughout banks throughout the country. The drop in economic activity that comes from this financial crisis was very severe. By some estimates, you had an unemployment rate of almost 20%. You had a drop in individual production of almost 15%. And this occurs in 1893. The country didn't actually see a recovery until 1897. So that's the worst, but it's by no means the other one, the only financial panic that occurs. There were other panics, for example, in 1873, in 1884, 1890. So there were 8 of these altogether in that period of the national banking system. Now, what's important is there are some common features of these panics in this roughly 50-year period. For one, panics tended to occur in the late summer and in the fall. And this is because the country at this point is still very much an agricultural economy. And as farmers would bring their crops to market, this is when credit is the greatest. The needs of credit is the greatest. And so there tends to be a depletion of reserves in the late summer, early fall. And under the national banking system, very often the system simply couldn't supply enough currency to meet demand. Again, it's an inelastic money supply. It's a money supply that does not fluctuate based on the needs based on the commercial needs of the country. Now, anytime you have a restriction of credit, you're going to have much higher interest rates. And this it hurts farmers because they are constantly reliant on borrowed money, and usually short-term borrowed money. So this really hurts the agricultural economy. Anytime you had uncertainty of the health of banks, when you didn't have a central bank that could put money into the system as needed, this uncertainty would spread throughout the country. So you would have bank runs where people would pull their deposits out of banks. So these financial crises tended to be exacerbated greatly. And with these crises, you get more and more calls for banking reform. And then we'll see in the next video, we're going to talk about the Panic of 1907. That is very important because the Panic of 1907, where you have, to some extent, you have intervention by the Treasury, but you really have the bailout that is being coordinated by private interests. It leads to a call for reform that eventually leads to the creation of the U.S. Federal Reserve in 1913. We'll talk about that in the next video. Thank you for tuning in. We'll see you next time.